All right, well, the Treasury Secretary, Tim Geithner, is going to testify once again about the TARP today. Congressional Oversight Panel holding a hearing on that. He's expected to be under fire about how the program has been run and what kind of losses taxpayers are looking at there. Tony Danaher is back with me from Guild Investment Management in L.A. What did you like to know about the TARP, Tony?
Well, I have a feeling they're going to discuss how the TARP is going to lose most of the money on these automaker fundings that they were given.
Well, that came out yesterday, the Congressional Oversight Panel saying, just to tell people what we're talking about here, that it looks like the majority of the initial $20-some-odd billion investment's not coming back, and that overall taxpayers are going to take losses on the automaker bailout, which I think we expected probably going in. We weren't going to get all of that back. What about the overall effectiveness of the program such as it is? What's your take?
Well, one of the purposes of TARP was to get the banks to start lending again, to free up some of the capital within the banks so that they could make loans, so that they could get some of these assets off their books, write down these assets, and have the liquidity to make loans. Banks have yet not started to make those loans. The velocity of money in the system is not coming from the banking system as we would like, because they have derivative instruments, they have overvalued assets, they have bad loans on their books that they still haven't come to terms with what the true values are. And that's going to be some of the criticism of TARP and of these other PPIP programs.
Right.
They have to get the banks to start lending money, and the banks have to be comfortable with their balance sheet before they'll do that.
Now, if we look at some of the programs, and there have been so many that have been put in place since last fall by the government, you would, and it depends who you talk to, of course, and what their point of view is on this, but some people would say, well, some of the measures taken by the Federal Reserve have been at least somewhat effective. Some others would argue that the stimulus is starting to take hold now a little bit, and we've seen that in some of the economic numbers getting a boost because of that. The TARP, though, was sold to us as one thing, as I think you pointed out a moment ago, and we never actually got that move about the troubled assets, which is what TARP really stands for. That's what the acronym is all about. If it was executed differently, if it was put in place as it was advertised, would we have recovered more quickly?
Perhaps not. When it was put together hastily last year, the $700 billion was meant for one thing. It quickly morphed and became more important to recapitalize banks, just give them capital. And without putting any attachments on that capital and what the banks could do with it, you had banks doing different things with it. Now you've got some banks that have been able to pay it back, others haven't. We still have many smaller banks, TARP recipients, that are still in trouble. So it's been very uneven. And to the extent that a bank has been able to raise capital in the markets in the last 7 months, and many have, they're able to pay that TARP money back, but they're still not making the loans that they need to make to get the economy going.
And that's key. Tony, thanks.